Edmonton's housing market just tipped into a buyer's market, but it's not because sales have crashed. The real reason is hiding in the economic data, and that's what we're going to unpack today. I just posted my October 2025 housing market update for Edmonton, and I went through all the stats, but there are a few key takeaways I wanted to remind you of in case you missed that video. Basically, overall, Edmonton's total residential market has slipped into a buyer's market, and it's the first time this year, and it's mainly because of rising inventory, not crashing sales. The detached market is now also in a weak buyer's market. Inventory is up 23% year over year, but sales are only down slightly. A semi-detached, which is basically half duplexes, there's been a big inventory surge, showing that it's up 65% year over year, shifting from a strong seller's market last year to neutral territory now. And the row/townhouses, that's most commonly going to be townhouse condos. That's just barely a balanced market, and that inventory is also up a lot. It's up 69% year over year, and that's the biggest jump that we've seen in any segment in terms of inventory. Apartments are still firm buyer's market territory with a 20% absorption rate. Inventory is up modestly, but prices are basically flat year over year. In terms of pricing, the two-story homes have held up the best, and they're still well above prices from last year. Bungalow prices have softened more in the second half of this year. Townhouses are quite a bit off of their spring highs, but they're still up year over year. And in my opinion, apartment prices haven't really moved. That June spike that we saw was likely just bad data or something. Big picture is that the sales didn't drop much. It's the jump in listings that shifted the balance. So that's kind of a quick overview of the key takeaways from the market update that we looked at in my previous video. But what I wanted to look at now is economic indicators that are also driving the shift, because it's not all about just the sales and listings. This economic data plays a role. So the first thing that we'll look at is employment. Net job creation in Edmonton is actually up. If you look at it, the number of people working in the Edmonton region, it went up month over month in August by 3,900 positions. If you compared that to last year, employment levels are up 3.7% for a net gain of 30,500 jobs. So that sounds good on the surface. If you look at the chart here, you can see that it's been pushing up over the last several years, but that's not the whole picture. Even though the jobs are up, the unemployment rate rose to 8.5%. So that's the next thing here. So despite the increase in job numbers, the unemployment rate in Edmonton increased to 8.5% from 7.9% in July due to a strong labor force growth. So that basically means the number of new jobs is not keeping pace with the population growth, and that's what's caused the unemployment rate to go up. The next thing worth looking at is the residential building permit values. The total value of residential building permits issued in Metro Edmonton increased in July by 11% from a year prior to 471.8 million. After 7 months this year, so this is the year-to-date number, residential building intentions were up 19% from January to July 2024 to almost 3.1 billion. So we're seeing strong early year activity, increasing the total value of building permits in residential construction. I do think inflation has still contributed to this, even though when we look at the actual CPI, which is the next thing, it makes it look like Edmonton's not seeing much inflation. They're saying it's up 1.3% year over year in August compared to 1.2% increase in July, and the annualized number is 1.7%. That doesn't seem very high. I know I think they target 2% or something like that, but the value of the buildings is higher than that. If we look at detached housing starts, so this is basically when they start building one of these. You can look at the history over the last few years here. Single detached starts in Edmonton CMA decreased in August by 9% from a year ago levels to 629 units. So that's just looking at that month only. Within the city of Edmonton, home builders started work on 401 single family homes, representing a decline of 12.4% from a year prior. So the first one's the Edmonton CMA and the second one is just for Edmonton, but that's not really the whole story because it's just looking at 1 month. You can see looking at this chart that in August we had less starts than we did in 2024, but more than we did in 2023. Same thing for July and June. but in May, we actually had more starts than the last 2 years. In 2025, it was about equal. In April, quite a bit higher in March, higher in February, higher in January. So that's where the year-to-date number comes in, which I think would probably be a little bit more valuable here. So far this year, it says single-family starts in the Edmonton region have increased by 8.7% from the first 8 months of 2024 to 4,732 units. The region's single detached home builders are on pace to exceed their production reported in the previous 5 years, which averaged close to 5,600 units annually. So actually looks like they're gonna be on a high for the year. This should be contributing to inventory on one side of it, especially if they're hitting 5-year highs. But you can see going back to 2017, what they're on track here is to basically beat everything in the last 5 years, but it actually beating everything going back all the way to 2017. So it's hard not to imagine that playing a role in the shift in the market, right? A lot of the new home inventory does not go on the MLS. Like there's a decent chunk of it on there, but there's a whole bunch that doesn't. But at the end of the day, consumers have choice. If there's a whole bunch of new homes available, sometimes if somebody goes and buys one of those brand new homes, they're not buying a resale home instead. Or some of that inventory that we're seeing in the resale market could actually be somebody that is selling because they're now buying a brand new home that's not represented in the data. So I do think this plays a role. I can't like connect all the pieces, but seeing that we're definitely building a lot more detached homes than we have in a long time, 5-year high or more, right? I do think that's got to be contributing to the overall picture that's caused inventory to be higher and started to soften prices. So the new home inventory, this one kind of contradicts what I just said. So you kind of have to take it all in stride here, but it says new home inventory, there were 1,516 completed and unoccupied single and semi-detached units, including show homes reported by CMHC in the Edmonton region in August, up from 1,493 units in the preceding month. In August 2024, they recorded 1,327 unabsorbed new singles and semis in the inventory across Greater Edmonton. It's up from last year, but it doesn't look that crazy. These are the unabsorbed ones. So it doesn't look like that part of the market, like the new home inventory, is bulging, even though they are kind of building a lot more. So it's being well absorbed is what I would take from that. I do think it could still affect the resale market numbers. Even though it's getting absorbed there, that could take away from eating up some of the inventory on the other side, and also add to the inventory, like I just said, for people that might be selling their home if they're a move-up buyer, getting rid of their current home and buying a new home. So the average prices, just out of curiosity, for new houses, you can see that they're up. The average price for single-family homes absorbed in the Edmonton region increased by 5.7% year over year in August to $673,304. You can also see that that's quite a bit higher than the average price just in the resale market, right? So it is a premium product when you're buying brand new. For the year to date, the average single detached sale price was up 5.3% from January to August 2024 to $649,224. It's up over 5% both year over year and month over month. I did find it interesting to see that the Edmonton New Housing Price Index actually showed a decrease. So even though it feels like prices are higher, according to the index, it decreased 2.4% from a year ago, and year to date down by 0.3%. So it's making it look like it hasn't really moved much in the last year. Although you can see that there is still a seasonal swing in new housing prices. You could say that probably follows the normal spring summer market getting into the fall where it slows down, where you're probably going to get better deals on new homes in the late fall and winter months. And then another big one that we didn't talk about is the Alberta net migration. Alberta's population growth has slowed this year due to a net outflow of non-permanent residents, most notably temporary foreign workers and international students. Total net migration from all sources in the province amounted to 13,907 people during the second quarter, for a decrease of nearly 70% from April through June 2024. So we're still seeing positive net migration that started in late 2021 and really sort of peaked in 2023, 2024. It's worth noting that it's slowing. This, I think, would be a lagging indicator on what you're seeing in the actual home buying market, like resale and new construction, because most people, when they first move here, even if from another province, are probably not buying right away, right? Like it's takes quite a bit. In order for them to buy right away, they'd already have to be in a very strong financial position. They'd have to be comfortable buying right away, have the down payment, be able to juggle selling whatever property they might have had in their previous province. There are still a lot of people doing it, and I have a lot of clients like that, but a lot of those people are coming here and they're renting first. So they probably don't show up as buyers for another 2 or 3 years in a lot of cases, at least a good chunk of them. So us starting to see that Alberta net migration drop, I think we'll start to see the full effects of that in the next couple years as there's less of those people turning into buyers. So we might start to see demand drop over the next year or two because of this. You can probably see it in the rental market right now. I'm not as connected to the rental market and seeing the pulse on that, but if we talk to people, maybe that's something I could do in another video, but I would think that they're probably noticing the demand dropping a little bit because the net migration is slowing down. It's still there though, so it's still like a positive force for growth, but it's not as intense. Now, just to kind of reiterate what I was showing about this being more so about sales not dropping too much, and it's more about the inventory that's really changed the Edmonton market and caused things to shift. Let's just look at some more charts here. Looking at the greater Edmonton area detached sales, September 2025, and this just compares the last few years. So you can see this is the detached sales. We don't have it for the whole year, but the green line is 2025. You can see it didn't peak quite as much as it did in some parts of 2024 in April and May, but right now it's still barely off the line for 2024 and still above 2023 numbers. Not a significant change in sales, but the new listings for detached, this is where you do see that it's kind of separated from 2023 and 2024. It was kind of on track up until about April with 2024, but then in May, there was a notable uptick by at least 500 or 600 more new listings compared to 2024. Not quite as big of a increase in June, but still above 2024. Same thing with July and August. And now it actually going from August to September, we saw even a bit of an uptick in new listings from August to September, whereas in 2024 and 2023, the number of new listings those months actually went down. So it's actually, again, separating from the trend from the last 2 years. So, you know, we see sales pretty much in line with where they were at the last couple of years, but we're seeing a divergence with the number of new listings. This is the same thing, but semi-detached. This is half duplexes. You can see here it's a little bit more noticeable that sales are down for half duplexes in 2025. Like they've been lower than 2024 sales basically since April, but are pretty on par in September at least. But for earlier parts of the year, it was quite a bit lower. And new listings, you can see that especially starting in June, the half duplexes or semi-detached market was seeing a lot more new listings from June, July, August. It's getting closer now in September, but you did get a bump there that can really start to shift the market once we got into the summer. Row and townhouse sales. This one, it's a little bit more obvious that it has dropped in some months, but it's still not like way off, right? Like we had more sales in May this year than we did in the last 2 years. It was pretty on par with 2024. Before that, still quite a bit above 2023 numbers. It's only the last 2 months where the sales for townhouses have dipped below 2023 numbers. And I wouldn't consider 2023 a bad year. I do think the sales are still okay, but you can see here, if you look at new listings, it's been consistently above both 2024 and 2020, like quite a bit above 2023 new listing numbers here for townhouses. Condominiums were below 2024 numbers for the most part for the year. In September, even below 2023 numbers for sales for apartments. And new listings, they're up a little bit, but nothing too crazy, especially if you're only comparing it to 2024. If you're looking at 2023, they're higher in most months, but nothing crazy. And then this next one, this is just punching everything together, residential sales in greater Edmonton area. It was pretty on track with 2024, but a few months it's been below. And this one, the greater Edmonton area residential new listings. So this is mushing everything together. It's not like a huge divergence, but it's enough over that it will start to shift the market, and that will take a lot of that price growth pressure out of the market. So what does this all mean? I'll repeat again that the main driver appears to be rising listings, not collapsing demand, and that's what's behind the market shift. I think it's a mix of new completions. We're getting more places built when we looked at that detached data for new homes, and there's more owners that I think are deciding to cash in. Sort of anecdotal, but when sellers or homeowners are not happy with current prices, unless they really need to, they just won't sell. They're always waiting for a better day where they can get more more for their house. And we had enough price growth in Edmonton that we did have a wave of sellers that felt it was, you know, time to sell this year. And then eventually that creates its own undoing when a lot more people enter the market trying to sell their property. Then you'll start to see prices drop again if demand doesn't keep up with it. So demand stayed relatively level, just down a little bit, but supply really came up. The buyer absorption is stable, but a little bit slower. One thing we didn't discuss was like delinquencies and other pressures on sellers. So it's one thing if they're going out and buying a brand new home because they were all of a sudden happy with the value of theirs, or for whatever reason they want to buy a brand new home, that could play part of a role. But interest rates have been elevated for a while now, and more people are getting hit by that renewal wall where it's like, oh wow, my interest rate is going up quite a bit, my payments are going up. I think that plays a pretty big role in this too. It's not just people wanting to get more for their house. It's also some people that are just deciding to get out of owning, right? It's getting too expensive. They decide to downsize or sell. I think that is also contributing to the increased inventory. It takes quite a while for that to play out, like years, like 3 to 5 years, essentially, since we've seen increases in interest rates. If somebody locked in 5 years ago and they're up for renewal now, or it's coming up, that can start to influence more people to get into selling their property. I did briefly look at what interest rates have been doing this year in terms of fixed rates, and the posted rates have not really moved that much over the last year, unless I was looking at it wrong. You've seen the variable rate drop a little bit, but the interest rates didn't like go up really this year. I think it's more about the renewal wall, people coming up for renewal and still feeling that pressure. So even though interest rates haven't gone up that much this year, feels like a big jump for anybody that's renewing that put their mortgage together 3 or 4 or 5 years ago, right? Now, in terms of what this means for buyers, I still think there's strong opportunities for buyers if you're strategic. Timing and your financing is going to matter. The nice properties are still moving pretty quickly, especially if they're in that affordable range, if they're a 2-story. I talked about how the pricing in that has been more resilient. If you're willing to do a little bit of work, you're going to see some more opportunities. Those properties are not going to sell as quickly as they did earlier in the year, but you still need to make sure you have your financing ready to go and, you know, can get your conditions dealt with quickly to entice sellers to accept some of those offers if you're wanting to try to negotiate a little bit more. But if you're looking for something where you don't have to lift a finger, it's mint, it's in great shape, it's been really well maintained, and they've done everything, you're probably still going to be dissatisfied with your ability to negotiate much on those, unless they happen to really overprice it, kind of thing. But if they've got it priced just right, it's still going to move. Those properties are still moving. If you're a seller, I would say pricing it right now matters more than ever. If you overprice it, it will sit. We're not riding the wave anymore of price growth. If anything, prices are dropping right now. So you really need to get with the program if you want to get your property sold, and make sure you're realistic on your pricing and not being overly optimistic. Don't cherry pick your comparables. A while ago, I had a client write an offer on a property that was really nice, maintained well, beautiful, but the price they listed it at wasn't justified by the comps. I felt like they cherry picked comps that were 10 years newer than their property and treating their property like it was worth the same as a similar property that was 10 years newer, and in reality it's just not. The last I checked, it hadn't sold. They had to reduce their price again. My clients moved on and bought something else. Buyers are, even if they love your house, nobody wants to overpay for it. If everything in the neighborhood's selling for $460, $470, and you're expecting $500K or more for a similar type of property because newer places are selling for that, then, you know, you might run into a problem. But we're basically moving from a market where, especially for detached homes, where pretty much everything sells, to a market where the good ones sell. If you're selling, if you have the budget and the time to fix up your property, I'm not talking about doing a complete renovation, but if you at least fix the broken stuff, that can make a big difference. If your roof needs to be done right away, that's a huge expense for a buyer. Likely you have a better ability to finance that than the buyer does. They had to scrape together their down payment, maybe, unless you're in like a more of a luxury market. But if you're in anything in the starter home category, taking care of things like that just need to be done right now, like the roof, it needs to be replaced in the next year or two, probably better off doing it now, even though it's a big expense. That'll really hurt your ability to sell if you don't do it, because there's a whole bunch of people that just don't have the capital to deal with that when they're a buyer, and you could be doing yourself a big favor by just making it so they don't have any huge expenses to deal with. Same thing could be said for a furnace. If it's on like its last legs, if you have like a 30-year-old furnace, then maybe you consider replacing it. That one's not quite as desperate of a situation as a roof that could start leaking. But it's also worth considering, and just doing all the handyman stuff around the house makes a big difference. If you're able to paint, it's a little harder to do when you're living in the property, but if you're moving out and it's going to be vacant, buyers are super judgmental of properties that haven't been painted in 10 or 15 years, or it just had people that were rough on it and it's all beat up. They start thinking that means like the house itself wasn't well taken care of, when really walls just get scuffed really easily. And if a house hasn't been painted in that long, it's not going to look great. You can make it look way better and essentially fool people into thinking the house has been well maintained just by painting. I realize that's not easy to do if you're still living in the property, but that is one of the things that's worth considering if you're a seller. So that's what's really behind Edmonton's housing market slowdown. Don't really feel like it's a slowdown in terms of demand, as I've mentioned. It's a slowdown in price growth and a reversal of price growth in a lot of cases, simply because the balance has shifted. A lot more people selling, not quite as many people buying. That's caused prices to level off and drop off a little bit. The buyer activity is still solid, but the new listings have climbed and tipped the balance. If you wanted to see how this affects your neighborhood or your particular property, if you're looking at buying or selling, feel free to reach out to me at 780-819-5508 or go to booktrevornow.com to schedule a free consultation call. I hope you guys got value out of my rambling video. Let me know what you think in the comments, and I'll see you on the next one.